Well, good day. Ira Epstein with your financial market wrap-up, and this is for Thursday, the 8th of June, 2023, 6:15 p.m. Apologize for not being able to put out an update last night. Had a family emergency, literally, right at this time. I was getting ready to shoot. By the time it got done, it was too late. I wasn't going to post it that late. It takes time, and I just gave up on it. It all turned out great. That's the good news. Everything got resolved in a positive way. All right. So let's talk about this. Now I'm going to show you something. This moved the markets today. This is the market today completely. Jobless claims, they expected it up 3,000. It went up 28. The market applauds this. This is what the market wants to see, the impact of the Fed program. And suddenly we are not seeing people getting jobs or going on unemployment, getting let go, whatever the case may be. The flip-flop, and it got absolutely no press, which is not right, is that the continuing claims, those are people out of work over a week, 37,000 of them found a job. So was this the wobble or wasn't it? Is this the noise in the market because it's such a big jump and you haven't been doing those? Nobody really knows. But it was enough to tip the market's hand. And what do I mean by that? Well, if you take a look at these prices while you're down, they're all up pretty big. And in fact, the S&P, if you listen, it's 20% off its lows, so it's back in bull market territory. You'll see that on news headlines if you watch the financial news. So, is this it? Is that the number that will keep the Fed from raising interest rates? As you know, the naysayers don't think they're going to raise rates regardless of what comes out. And we still have the CPI number, which the Fed can peek at. While they go into their two-day meeting, you know, they're still going to be able to see things. And as they see those things, they're going to get some CPI numbers. So this was a beneficial number. Don't mistake it for anything but that. Yes, I gave you the real analysis. But for the ones that want to say, nah, the Fed's going to go into the pause mode right here, they're going to hang on that. And you saw the dollar down sharply, gold up big, but the silver exploded nearly, 85 cents today to the upside. Copper's no longer 360s. Copper's pushing the 380 level. You saw the bonds and notes come off their lows, which means yields gave back something. Adding fuel to the fire, a good fire, if you will, is the fact that energy prices are slipping a bit. Now, energy had a rumor mill hit today, and it dropped oil at 1.4% in price. And the rumor mill was that Iran and the U.S. are about to sign a nuclear treaty. And that would, part of it, bring the oil back to the market that Iran hasn't been able to sell with all the sanctions on it. It tanked these markets. Now, the markets did rally back. They made back about a half of what they lost. Why did they make it all back? That bothers me. And why are they lower right now? That bothers me. So where there's this smoke, could there be any fire? I don't know. But it's something that we have to think about. And obviously, for those dependent on oil, if Iranian oil could come back, well, what does that do to the Saudis? Why are they going to cut 1 million barrels a day as this oil would show up? I don't think they would. I don't know what they would do, but they got to rethink their program if there's any truth to this. And none of us know at this point if there is or isn't. When you look at the S&P, there is no question that since October, this market flattened out and it has come back with a vengeance. The traders that thought the 4,000 level, I was one of them, would hold the market back, wrong. Traders that thought the 4,100 level will hold the market back, another guy here, wrong. 4,200, another guy here, wrong. So as you keep hearing people saying, oh, you know, this market's going to correct hard, here's the argument that I have for you. It's difficult to get a hard correction, and I get it, when you have a labor market this strong. If labor weakens, that's when the stock market could have a problem. I use the word could. Europe today formally went into a recession. It lost its ground in both the fourth and the first quarter, negative. And today, formally there. Is it falling apart? No, but that's what it is. Why not falling apart? Because labor's so strong. Did today's labor number show the weakness and that changes things? Don't know. But as you see how the market has come up, you're strong as can be. You're not in a trend per se. You've got a big lift, but you got a higher high and low pattern. You've been over the 18-day average. The battleground was fought there. Everything I teach in the charting part in my full courses was correct. The market went up to the Bollinger Band. And study these Bollinger Bands. They're so darn important. It's held the market back, but it's still pointing up. It hasn't begun to curl back. So no sign yet that this market's got a problem of any type. And now we add fuel to the fire because you have an embedded reading, which tells me until the red line's under 79, the pros will buy the breaks in the market. There's a certain way to do it. I teach you in the course. There are rules to how you buy into the break. Learn them. I think they will come and become part of your trading arsenal. At the end of this, we will have an ad on that, and just click it and you'll be able to learn from there what's going on. In the NASDAQ, this is so important. So what the NASDAQ did yesterday when I wasn't here is the market, let's see if I can get it to come back. It's not going to do it. It had flirted with losing the embedded reading. It gained it right back today. An 82 reading is not being lost. If it stays like that and starts up, you still are targeting the 14,887 level. If it closes under 79, you got to be out in longs. Hasn't done that. It got close. I mean, real close. Couldn't quite do it. When we look at the micro mini Dow, overbought, finding support, which was resistance. The resistance number before was waffling back and forth. Was the resistance the 100? Was it support on pullbacks again? Questionable all the way through. But what's been very evident is each break to the Bollinger Band has ended a bear move, and each rally to the upper Bollinger Band has been the area to come out of longs and then look to replace them. The trend is up. Currently, the support is the 100-day average at 33,511, but you have an overbought market. You haven't locked momentum in. And I told traders this morning in my subscriber video, and by the way, you see the blue button on the bottom over here? If you're watching me on YouTube, if you click that, that's how you join me in the morning subscriber videos. I told them, look, this market, the odds are loaded that the price is going to move to the 18-day average of closes. The Bollinger Band under it. Why? You would have the very close to the max amount of numbers you normally get to before that occurs. Right on target, overbought. Yes, it's been the stellar rocket ship, but not a trading rocket ship, not a good one. So now we get to the SEP bonds, and this is the key area of resistance. Here's something we got to think about, nobody's talked about. If the Fed's going to go into a pause mode, you know, the 2-10-year that moved from 0 out to 105, you do realize that, then fell back just recently into the 50-60 level, went back to the 80s, and now it's back in the 70s. Is it time to go the other way on that? Looking for it to go back to near even if the Fed goes into a pause, because then the next step is the decline. And once they go into the decline, why can't you flatten the curve yield? Something to think about. So just pay attention to that. This is the longest part of the curve yield. It's still in the bear mode. You'd have to take out 128.16 to stop that. I don't know that the trade wants to go big time short or long into Wednesday's FOMC meeting. I haven't the slightest idea what they're going to do. When you look at the 5-year notes, you're oversold in a downtrend. The resistance numbers 108 back up to the 109 area. You can see that. And in the dollar, you're back to the bear camp. Yes, the bear camp. Now you have to go back over 104.36 to negate this. Momentum is with the market. Bias. The pros are probably selling up here. It's a big risk. It's near $1,000 on the risk on a futures. And the objective's back towards the 102 to the lower Bollinger Band. Do you take those kind of risks? That's the first thing. Do you do it in front of the FOMC meeting? That's the second, because everything's out of your control. It's what they do is going to be the reaction to the market. We already know that if they go up 25 basis points, the naysayers will go, it's July that they're going to pause. You know it. I know it. They know it. Will they go the 25 basis points? That is the question right now. If you go to the CME FedWatch page, the odds are stacked up that they won't. I have not been in that camp, I admit it. Again, I'm Mr. Swiss cheese. I can be wrong. Higher lows, higher highs. By the way, the reason I'm not in that camp, I can defend myself. We saw the Bank of Canada and the Reserve Bank of Australia both try to pause. When they did, because they took their foot off the pedal, that's all they did. They didn't break anything. Inflation didn't come down. So this animal of inflation, in order to keep it down, I think you got to make it overshoot. So I do think the Fed should go to 25 points, right or wrong. I think these wobbles and these other indicators is great. Will another 25 basis point push us into a severe recession? Certainly not. Let's assume that the numbers that come out show this was a mistake number in the employment claims. Okay, then you did the right thing. Let's assume it's the beginning of something. So you went to 5.25, 5.5 range. Who cares? Does that quarter point do it? Now flip it around. Inflation numbers come out. Sticky CPI, sticky inflation. You got to go for that. I don't think you miss by going the quarter point. That's what I would do if I'm the Fed. I think these other two banks have made your case for you, but that's my opinion. When you come to the British pound, June 22nd, they and the European Central Bank are going to make a move. The market's telling you what it is. They're going higher. Higher lows, higher highs. Now this is what? A profit-taking area. Why? You're not embedded. Take, at the end of this, look at that Bollinger Band course. Take it. It's not expensive. Very inexpensive. And you're going to learn. And my instincts are it will stay with you the rest of your trading life. In June micro Bitcoin. The good news for Bitcoin, and let's give this a little bit of an applause, is it's not falling apart, is Binance and Coinbase are getting absolutely come after by the Fed. Fed's going to win. They are going to be regulated. If they want to do business here, they either do it the way that the SEC is going to do it or not. We'll see if I'm right or wrong. I'll bet on the Fed. In other words, the federal government, that they're going to win these cases. And at the end of the day, it's better for everybody. If these companies don't want to do that by the rules that the SEC and CFTC set, don't play the game here. Really that simple. I think it needs regulation. Brent versus WTI. You can see how it went up and it gave back a little bit today. But again, that part of that is, well, why would it have a big premium over WTI if Iran's coming? But more in line with this is a big part of the Brent pricing now is going to move based on WTI. Our grade of oil is now coming into the pricing mechanism as of, I believe it's today. So you read about it. Bloomberg will have stories. Reuters, go type in oil news and you'll be able to read this on Google. Do a better job of explaining it than me. As for the Brent, look at how this market fell apart when that news came. And as I said, it didn't make that back. That's the interesting part. So until it does, you're back in a downtrend. Are you going to the Bollinger Band is the question. Wow. Take a look at how close you got to the Bollinger Band and WTI. Traders were looking at that. And again, you didn't make back those gains. Gasoline hit the upper band. Ba-ba. I told you this 2 days ago. That's where the pros are going to take their profit. And that's exactly what took place. That was the goal. That's what we thought would happen. And now on pullbacks, this is the area that everybody's going to look at in a big way. That 253.5 zone, about 6.5, 7 cents lower, should be the support. You've lost the bearish and embedded reading in natural gas. I said when that happened, said it 2 days ago, that's when I'm looking for a challenge of the 18-day average. Ta-da, it's happening. Learn how I come up with these calls. Please, they're so darn important. How do you do it? You're going to see here this ad coming up. When you're watching it, if you move your cursor to the top, there'll be a an icon show up. It'll take you to the section. Otherwise, go to iraepstein.com. Under the word education, the courses are there. Folks, it includes so much. It's all video courses. You're going to get the charting software to work with it. You're going to see what I do. And then I give you a couple weeks to free access to my ETF and my other information, including my free research. I mean, you get quite a bit for it. It's not expensive. I'm Ira. You have a great day. Learn. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.